One voice, brawling enough.
I've money on my brain, thought what you're saying. Ice on chains, fly out of plane. I've money on my brain, crypto, all you're saying. Talk out with the cool, man, I swear to the lane. Ice on my neck, that shine like a gem. If you don't talk money, man, I know what you're saying. It kinda hot, just body stocks. Dance with the 100, what I never gas. I went out the hood, not out the app. Full up be a cheddar. Every day that we have my money.
What's up, guys? Welcome back. Malik here, and today we had NFP. And hold on. Yeah, I just wanted to have Grok up here so we could actually talk about what happened with NFP today. That release was at, what was it, 8 or 8:30? And then after that, I'll actually look at what time it came out, but you can see we had a shoot up today. And that's the thing, like, I was there driving. I'm looking at the market. I know that the release is about to happen. And then it just shot up and I'm like, damn. Oh, it was actually 8:30 because I entered 3 minutes after that. And I just wasn't thinking to trade such a high impact news, but it would have been a clean trade looking at this. Like looking at this 1 hour chart, you can see it would have been a nice clean trade. You wouldn't have to risk much to make what, like $200, which is crazy. I'm like, how does this happen? Like, why didn't I even catch that? But that's what happens sometimes. So let's get into the trades. I had 4 trades today. Basically one trade brought me back to break even or a little bit above break even. And that's basically what happened today. So I'll show you that. Buy side on the entirety of the day, but I kept getting stopped out, and like the market went even higher, but I just kept getting stopped out. So we're gonna go through that and reanalyze and see where I could have adjusted and done better. So looking at where I started the first trade, you can see I entered at 7 p.m. yesterday, and then I actually got stopped out at 3 a.m. So 7 is 19. Let's remove one of these. Yeah. And my entry, so we're looking at this one. My entry was 17,643. So you can see it's pretty close to that because I'm on the correct candle. And then I got stopped out at 17,614. And this is saying I got stopped out at 3 a.m. This should reflect it. Yeah. So you can see I got stopped out here. Just that tap. If it wasn't for this tap, I probably would have still, wow, that hurt a little, you know? If I had a $25 stop loss or a $30 stop loss, I would have been able to capitalize on this entire move. And I would have probably just closed it immediately there. That would have been a 5-to-1 risk. So I could have risked 30 to make 150 basically there. Not bad. So you see that these opportunities are in the market, but you have to be playing, you have to be participating to actually catch some of them. So everybody wants to sit down, look, watch, not lose any money, not take any chances, not take any losses, wait on the perfect time. It's never the perfect time. The perfect time is when opportunity meets consistency. You have to be in the market playing, and sometimes you're going to catch some of these moves. Let's actually see the next trade. So the next trade I entered at 8:33, and I was able to actually sit out that for the entire day, and I closed it at 4:30. You can see I caught basically the full move on that. Well, I didn't catch a full move. I can actually see where I entered. Ah, man, I had a sucky entrance from what I'm seeing right here. Because I entered at 17,804, which is basically at the top of the candle. 804.5. So that's basically the top of the candle. I only caught the crumbs. Still caught some, but I caught the crumbs on this one. And then I closed this at 910. My risk would have been about 20. So it was like 3-to-1. what would have been, I don't know what my stop loss was. Would have been a $20 stop loss. Like a little, probably like something like that. I made like probably 3 to 1 because I risked 20. It's a little over 3. It's probably something like that. So I didn't get stopped out, but I was able to take this move up to the 4 candle here. So I closed it out at 430. I was able to sit through a good chunk of it, but I would say I'm a little disappointed I didn't catch this move because I was buy side bias, but I'm just very hesitant to trade news because of how it goes a lot of the times. Um, let's look into the next trade now. I entered at 10 a.m. I got stopped out at 10:04. So I tried to actually pile on. So I was thinking, all right, I missed that move. Let me actually try to catch the next leg up if we actually continued. We can see I kept my risk at 20. I don't deviate from that. It doesn't matter what's going on in the market. I'm not upping my risk for a trade. If it doesn't hit, it doesn't hit, and probably I shouldn't even be trading for the rest of the day. So I entered here 17,864, and then I got stopped out at 17,836. Total loss of 2023. So I entered here, got stopped out here on the same candle 2 minutes later. When I get stopped out so quickly, it's actually painful. I'm not gonna lie. And then this next one I entered on the same 10 o'clock candle, but the difference in entry was at 17,843.7. You can see I didn't change my bias. I had conviction that the market was going up, but placing my stop is what really damaged me. 17,815.1, and I actually entered to the upside, got stopped out for a total loss of 2016. You can see I was in this trade for about 17 minutes and still got stopped out. I would have had to have a better entry to capitalize on a nice move here. So I could have risked about $28 to make 99 if I was risking a 0.1 on this. That would be a straight up trade, 0.1, make a 3 to 1 there. But there's no guarantee on this because you can still get stopped out. But this, I'm telling you this, if you're actually watching this, it's as simple as this is what I like with trading. Once my strategy is that consistent, it's as simple as moving it to a 0.7, and this risk loss would have been 200 and this profit would have been 700. So it's a big difference. I would have lost, of course, 200 here, 200 here, 200 here. So I would have lost 600 on these trades, which I'm not very used to as yet. So it could have played with my psychology. And then I would have made 700 on this trade where I was right. So something to look at. And that's what I'm looking to do when it comes to this, just that scaling factor. Let's actually go to Grok and see what they said about NFP that actually pushed up the market today. So was said during NFP that made the market go up like that today. See, Grok AI is able to scrub Twitter and actually tell us what's going on. So non-farm payrolls had a significant impact on the market. Reports showed that non-farm payrolls were 175,000 last month, lower than the upwardly revised total of 315,000 in March. This result was below both the 238,000 forecast and the 243,000 consensus, which led to the market reaction. Upon the release of this data, the US dollar came under heavy selling pressure. At, at the time of the report, the US dollar index was down 0.7% on the day at 104.6. This sell-off was a direct response to the lower than expected job growth, indicating a weakening in the labor market and potentially influencing future monetary policy decisions. The non-farm payrolls report is closely watched by policymakers and market participants as it provides a crucial indicator of the overall health of the economy. The lower than expected job growth in April may have raised concerns about the pace of economic recovery and the potential impact on inflation and interest rates. Let's see. So the lower than expected job growth. How why would the market take this as bullish? What kind of policy decisions may or can come out of this? That's what I like with AI. It can kind of give you a more direct answer and just answer some questions and even give you tweets that can like confirm that. So, okay. So basically, they're saying a lower job growth can signal weakening in the labor market and potentially influence future monetary policy decisions. Okay. Potential for interest rate cuts. Inflationary pressure. A slower job growth rate can ease inflationary pressures in the economy. With fewer jobs being added and potentially less wage growth, there may be less upward pressure on prices, which is generally seen as positive for the market. Market sentiment. The lower than expected job growth could also lead to a shift in market sentiment. Investors may view the weaker job numbers as a sign of a potential slowdown in the economy, which could lead to a bad news is good news mentality, where weaker economic data increases the likelihood of supportive monetary policy from the Federal Reserve. Wow. As for policy decisions that may come out of this, here are some possibilities: Federal Reserve interest rate adjustments, fiscal policy changes such as more spending from the government, labor market reforms. Policymakers might consider implementing reforms to improve the labor market, such as enhancing job training programs, and adjusting regulations to encourage hiring. Right, and that's basically it. So you can see what the non-farm payrolls can actually influence. So in conclusion, the lower than expected job growth can lead to a bullish market reaction due to the potential for interest rate cuts, easing of inflationary pressures. Policymakers might also respond with adjustments to monetary and fiscal policies or labor market reforms, right? And let's get into the watch list stocks now. So 5/3/2024. And let's see, I think Bitcoin is going crazy up right now. Boom. Wow. 63102. Bitcoin is going up 4,000 from yesterday. I think Tesla probably had a bullish reaction. Barely. It sold off to have like a little trickle up. It's the same as yesterday, basically. IMMR, that's not a big mover, so we have you at 7.22. What's this now? Bitfarms, I think you're still a little lower. I don't think any of this even matters to Bitfarms. It's just selling. But it might be a good time to just collect positions. But you can see, even on the 1 hour, you don't have really good price action. You have bullshit price action. Well, I guess this is after hours anyways, but during market hours, which is here, I guess you have, I don't think you have that much persons trading it. So if it's able to trade in one direction, it's just gonna move that way drastically for the day, from what I'm seeing. Nvidia is up a little higher. You have to remember that they have earnings, so people have to prepare themselves for that and even push it up a little to kind of get people involved. AMD moving like Nvidia as well, with that bullish price action, not like Tesla, not like Bitfarms, similar to Bitcoin, SMCI. I would expect the same. I would expect a little bullish movement, but that bullish movement actually happened pre-market. So we're getting back into a zone here where SMCI might actually go up and actually start to reclaim all of this level. So wow, I might try to take a bullish position here. Give it how much? It's sticky because you can, it might reclaim this level, but you can also have a little push up to just fill all of this and come back to the upside, and that's up to 851. So it depends on the price of the option. I would look to trade that. Let's see. I would say bullish continued with weak NFP numbers. Bad news equal good news. Tesla same. Semiconductors sneaking up. Bitfarms. Bitfarms is lower. IMMR same. That's basically it on the narrative for today. Very interesting week, huh? We had, what's this? 1, 2, 3, 4, 5. So we had Bitcoin start at 6.3, close at 6.3. So if you actually go to BTC USD, you see that on the week, you're basically doji. Yeah, look at that. Look at that. Wow. Very interesting here. Very, very interesting. So, I mean, we are very bullish. It came and kind of tapped it, but I'm not very convinced. But the market can go anyway, and one candle from Bitcoin can really take all of this out and kind of tap back this level. That's a $10,000 move. So let's see if this happens. What happens next week? You know, I trade everything day by day. So we'll be there. Hope you enjoyed this video, and I'll see you in the next one.